What's going on, guys? Brian's here. Today is Sunday, May 7th, 2023. And what we're looking at right here is last week's price action on the SPY. Just going to try and break down, recap, and in a sense, demystify what some of my notes were. If you're a member of Quant Trading App, you guys know within the Discord here at the start of the week. So this was at 2:50 a.m. Sunday night, Monday morning, depending on how you want to look at that. Which is about midnight Pacific time. I posted this right here. So from my notes for what I was expecting for this week with a little bit of a breakdown, and then we have the price action, how things came out. And as you guys can see at the start of this time, this is retroactive. This is not retroactively. This was here at the start of the week. I'm just doing the video obviously after the week closed so we can go back and kind of recap how things played out. So depending on the FOMC announcement, it would not surprise me if the SPY pins close to 413 around here towards the end of the week. And what we can see, that's the market ended up pinning right around 413, again, days in advance. And then we have this here. I gave this price range. So price will likely be sticky in this range. Look for IV divergence as a sign to go long, or confirmation that this range will break down and 405 becomes the short target. So what we have right here, this is Monday's price action. We can see Tuesday, market sells off. It goes right to this zone in which I was expecting price to be sticky. What do we get? So prices by sticky, I mean, imagine consolidation, or price is going to be attracted to it, or so forth, right? Price sells off, and then we get the sticky price action within this area, and then we bounce. Where do we go? We go back up to 413, and then what happens? We come right back down to the sticky area. This level does not hold, and where does the SPY go? To 405, and then at 405 we end up getting sticky a little bit around 405. Market struggles to stay below that level, and then where do we go by Friday? We go right back up to 413, and then we close there. So if anybody had showed me this when I first started trading, I would have asked them if they're connected to some supernatural forces or something, because this is even to me, it still freaks me out at how this plays out this way, that a person can use certain tools and then decipher to within a certain degree or certain amount of accuracy what's likely to happen days in advance. And this is not based on, I'm not predicting or anything like that. I'm not saying this is exactly what's going to happen. I'm just coming up with likely scenarios. For my own approach, the way I think of it, it's almost like I'm playing chess and the opponent is the market for myself, and I just want to have a few steps ahead. What move are they likely to make if certain things happen? So in other words, if you play chess, let's just say I move my knight here, where are they going to move their bishop? If they move their bishop here, where do I want to move my knight again? Do I want to move my pawn? Do I want to move, my bishop myself, or my queen? XYZ. So if you play chess, think of it that way. I'm going to use a little bit of other analogies outside of the stock market as I'm trying to make this simplified and take away the more nuanced breakdown, the white paper of gamma exposure, and some of the more intricate things that would require heavy reading materials like the implied order book, and just use a little bit of common sense, because that's how it starts most of the time for myself. So if I'm looking at this chart, and it's the start of the week here, again, none of these levels exist on the chart, so it's just a blank chart, as I'm going to do. As you guys know, it's Sunday now, so tonight you guys can expect me to post something in Discord for next week's levels, and then if I don't get to it tonight, you guys can expect it to be tomorrow pre-market. I will post it again within the Discord in my notes, and you guys can have some sort of an idea. But the point is to be able to have you guys be able to see this for yourself, understand it, because even if another person told you what they think, it's very hard to have conviction in another person's ideas versus when you can come up with them for yourself. Because this is my game plan I'm sharing with you guys, or my rough idea of what I think is going to happen. So I have full heart conviction in these levels, and that's why I'm able to trade easier. You guys just see me come in and say like, okay, I'm opening this fly here, butterfly, I'm opening this iron condor here, I'm looking to short this here and XYZ. It's because I already came up with this game plan, and then I'm trying not to deviate from it as the week progresses. Now, as more information comes along, not information in terms of just a price action, not just because the market did some crazy move, I'm going to completely throw aside my plan. I'll tweak it and adjust it, because maybe I'll say, oh wow, I didn't expect them to move their knight. When I move my knight, I didn't think they were going to move their knight. Maybe I need to make some sort of an adjustment. If you play football, it's called an audible. time and time again, you can come up with all types of plans you want, but you want to have some sort of flexibility in your plan. So that's why it's not concrete. But that's also something that if you're Tom Brady, which is an American football player, if you haven't heard of him, he's the quarterback, legendary quarterback that played for the Patriots. He's infamous for calling audibles. If there's a play that they're going to run and it's the Super Bowl, and then he can read what the defense is lining up to do, and he's playing offense, if he can read something change on the defensive linemen, or he just picks up on a cue, maybe he just looks at a guy's face and he can tell something's off, he'll call an audible, which means he'll change the entire plan and they'll run a different play. But what makes him so great is he can actually decipher this before they actually have the ball in their hand. And that's something that any sport, any type of analogy, anything that anybody's great at, they usually have that type of ability. It's mostly the preparation as well as knowing how to adjust the plan accordingly, and being able to do that will really separate you from a lot of other traders. And you realize it's less and less actually with what's going on with these micro time frames. So sorry about the tangent. Let's get into it. This chart right here, this is Monday. So my first thought process being, where did the market just come from? You always want to start with that, because we're talking about from last week's lows. So this is Wednesday. The market just had this rally straight up to here. This is where it closed at. So this is a 3% rally or so, give or take a few percent. So it's not about the exact percentage, right? Rough idea. It could have been 2.8%. It could have been 2.70 something percent, whatever. This is a relatively large move for the SPY to make in such a short period of time. We're talking about Wednesday we close here, Thursday we gap up, and then we just have this straight rally. Now you guys have heard me mention this before too. Whenever the market makes any type of decision which you're looking to make in the market, there's only three things the market's going to do. It's either going to go up, it's going to stay sideways, or it's going to go down, right? So we have three scenarios, and that's it. It's always three scenarios. If you can just simplify it like that for yourself, and what do you think is going to happen? Now, if we have a move straight up, we know, and if you didn't know, now you'll likely know this, the likely scenario after a move straight up very quickly or sharp, it's likely to be either consolidation or some sort of a pullback. Now, most new traders, retail traders, think the market is always going to go straight up, then it goes straight down, and then it goes straight up. And that's why everyone, if you look at social media, if you look online, if you look on Twitter, or back in the days, the comical place to be was stock twits. You'll just see everybody saying it's going to the moon, or this is going to crash, or whatever. Everyone's just so opinionated and want things to happen right away because people are impatient and things like that. But if we really think about it, after a really big move, the most likely scenarios is sideways price action, right? So, and if we were to start Monday here, we see Monday was relatively choppy. The market opened here and then we closed here. Now, it doesn't mean that is exactly how it was going to play out. I had no idea. I was more so thinking towards later in the week or towards the FOMC. But that's one way when you guys will see, if I run an at the money iron butterfly, for those of you that don't know what that trade is, it's an option spread in which I profit on if the market goes nowhere for a certain period of time. So if you guys notice at the end of the week, I might run an at the money iron butterfly. As I mentioned to you guys on Friday afternoon, I said, hey guys, a good play is after the market closes, because you can trade the SPY and the SPX options after the market closes. I said, just run an at the money iron butterfly targeting Tuesday's expiration if you don't want to do Monday, and just expect time decay. So that trade ended up being, it was well over 40% if I remember correctly. I don't want to go into every single spread and position in which I was in, but they're all, most of them are here. You guys know what I'm talking about if you're within Quant Trading App. You guys know the trades in which I'm referencing. I don't want to be spending too much time in these videos moving forward going over every single trade that I've taken or every single trade that was mentioned here, as that's just going to eat up so much time, as there's so many different positions that are run throughout the week, and there's just so much to learn from them, which is why I want to focus on the general idea, because that's what's more important. If you know what's going on, if you can decipher or have some sort of a game plan before it happens, that's where you'll actually improve as a trader, because then you can trade depending on your account size and what you're comfortable with, what type of spreads you're comfortable running, what type of trades maybe you run just futures, so this is not a day for you to trade because it's going to be choppy, and then you'll know some sort of volatility will come in. These are the days in which you want to be trading if you're trading futures, and use the same information for your own type of edge. And if you just like to go long call or long put options, then you know what to do too. This is a day to either scalp or don't trade. Save your mental capacity for when things are much cleaner. These are the days in which you want to trade if you trade long put options and so forth. So this trade Monday was an amazing day. It was very easy for us because the market went nowhere. And usually especially for my style of trading, if the market goes nowhere, then it means it's really going to be a really big P&L for me because I'm an option seller most of the time and I'm profiting through time decay. But the logic came from, we just had this really big move. We're pretty close to an absolute gamma strike. So what does this mean? As we break down my little cliff notes here, this is not something you read in a book. This isn't something that you'll necessarily find someplace else. This is just my own terminology, things that I came up with, my own shorthand here just to help me out. So WTD is just week to date. That's pretty standard. So if we go to our Quant Trading App here. If you guys don't know what Quant Trading App, link is in the description down below. I'm the lead developer of Quant Trading App. It is a tool to help us decipher a lot of the market information and hopefully makes it simple for us to break down some complex stuff such as absolute gamma. So there's a lot of different things to go over, but this video is just focused on the absolute gamma, and it's the week to date absolute gamma. So what I'm doing here is I just selected the strike price, the expirations for this upcoming week. This video is not for the upcoming week. I will post that for the Quant Trading App members after I do this video, but so it's not these expirations here. So what you're seeing now in the Discord, if we go back to my notes here, is at the start of the week I shared this screenshot here and with a little bit of my own notes, and then this is a screenshot of the page in which we're looking at. So I'm just showing you guys what the live page looks like, but we're not going to be breaking down this one in this video. So I'm going to pull up that screenshot. So this is the screenshot larger. It's the same one in the Discord from last week Sunday. And then right here would be the screenshot of what that page looked like. So that's where the meat of this video will go to. So we pull this up right here. So imagine this is a week ago, so May 1st. It's now May 7th. Well, granted, this is not May 1st. It's early in the morning Eastern time. So again, it's midnight, however you want to call it. I've been flipping between time zones a lot this year, between Pacific time and Eastern time. But this was what I was looking at. So first of all, QTA has these little bubbles here and these little notifications to let us know what strike prices to probably pay attention to. So those visual cues will already make things pretty easy. If you didn't know, this one right here, this green bubble is letting us know this is what's referred to as P1. So P1 is the highest positive gamma strike. And then this bubble right here is what's referred to as N1. So N1 is the highest negative gamma strike. And then we have this purple. The purple is the highest absolute gamma strike, and then we just have this right here. This is just letting us know this is the strike price with the most amount of call open interest. And then P1, I guess it's not on this chart, it's probably lower, it's probably at 400 is the strike price. It would be not P1, it would be the strike with the highest put open interest. So for me on my chart, when I'm jotting this down, that's what, if you see a CO1, that's just call open interest number one. So it's the strike price that has the most amount of call open interest. And then we'll get to the A2 and A1 and stuff in a second. But as we see A1 here, that's just letting me know that's the absolute gamma strike. So absolute gamma right here, 415, and here we have 415. So that's what that is. I'm just letting myself know that. What do we know about these gamma strikes? Again, I'm going to keep it. I'm not looking, moving forward, I'm not looking to get complicated with the explanations to gamma exposure. I've done a webinar on it. I've done a few videos getting a little bit more, break down what's happening, why it's happening, what the market makers are likely doing and how their algorithms are running. I encourage you to look up Squeeze Metrics white paper, look up the PDF on it, read the materials, get a proper options book, dive a little bit deeper if you care to. But honestly, I'm telling you, I did a lot of that research a few years back. I've built programs based on this, and a lot of the information is just slowly fading out of my mind. And that's just the natural way we learn. We hyper expose ourselves to something, and then the brain will focus on just what it needs to know, and all the other information just kind of fades into our subconscious. I'm no longer, deciphering exactly what this is happening, how this is happening, because I'm not a machine. I'm looking to make things simple. I just want these visual cues, and I want to be able to at least understand from a top-down approach what's likely to happen. So as we look at this here, I know this is absolute gamma. So on a simple level, these high gamma strikes means there's a lot of liquidity around these strikes. So I would expect price to, gravitate towards 415, be choppy a little bit around 415 and so forth. But with the fact that the market ended last week pretty close to the absolute gamma strike, this is kind of serves as a line in the sand or a benchmark. If the SPY remains above this level for this week, then we know who's really in control. Buyers are a little bit more aggressive. Buyers are hitting the ask more aggressively, and they're willing to step up to buy at the ask, and that's what drives price up. So where is price likely to go for this week? Well, 420. 420 is the highest, is the strike with the highest amount of call open interest. No interest above here. Above 425, nobody's interested in the SPY. So where does that come from? We can see that right here, 425. Well, I didn't bother to show in a screenshot. It's just there's no gamma really above. There was no real gamma exposure above that level. It's barely any call open interest. There was nothing up there. This chart also highlights this blue area kind of provides a framework for where the bulk of all the open interest is for the week. So we can see the majority of it is at 420 and then below. So this is kind of our, from an open interest perspective, this is in a sense the range in which one way we can think that the market is likely going to go. So if the market went up, this yellow level right here is letting us know this is the closest strike price to where the SPY was when the screenshot was taken. So we can see when the screenshot was taken, the SPY was at 415.93 because that's where we were, and which is the closest strike price is 416. And this column right here is just letting us know to get to 412, the market would have to go up about 1%. And then to drop down to 405, the market would have to be down about negative 2.63%. So that's in a sense our range. And that's a decent range, especially for an FOMC week. The reason I wouldn't expect it to go higher is because how we started this video. Where did the market come from? We had already a 3% rally. So what's the likelihood of it going 3% again or another 2%? That doesn't really make much sense. A 1% pop, yeah, that's pretty expected because then it's 4%. That's pretty big deal, but the market has done that. Granted, the type of volatility we've been having over the past year and a half or so. So logic. Common sense. That's how it starts, right? That's what I'm thinking as I'm drawing this, okay? And I want to be aware of where's my absolute gamma strike. Then what is this positive gamma exposure floor? What does this mean? If we come back to this, I'm just coming up with terminology for myself. Makes it simple. Right here, this is, you see all this green right here? This is all of the high net positive gamma strikes. So this right here, I'm calling the floor. Because this, after this strike price, I would pretty much say this is non-existent positive gamma. This is there's nothing really going on here. So I'm calling this the floor. If the floor breaks, where's the next support? We have 408. 408 sticks out right here, and we'll get to that in a second. So as we come back to my notes on the chart here, that's where 408 comes in. But more importantly, that's what I mean by positive gamma exposure floor. Now, if we break 415. We already established, or we said at the beginning of this, at the beginning of when I started breaking this down, this level right here, if we are holding above it, we know who's really in control or who's feeling more confident, bulls. If we are below it, then who's going to gain a little bit more confidence? Bears, all right? Keep it simple as that. Now, there's more complex reasons for why that's happening behind the scenes from the way the algorithms are working and the way the delta hedging and gamma hedging is occurring for option sellers and market makers. But that's above our pay grade. Who cares? I just want to know this level right here. Tell me where's the level that I want to be quote unquote bullish. Where's the level I want to be quote unquote bearish? Where am I expecting clean price action? In this range is where I would be expecting clean price action, because we can see there isn't really much. I don't really have any significant levels in this region. Again, there's other confluences. There's, maybe you have the previous days open, or there's other levels in between here, but just this video is just on my approach when I'm looking for the upcoming week to date gamma profile, because we do have other levels within Quant Trading App, even if I were to come here and just turn on the studies. So this right here, we have a couple other levels to add to as a potential support and resistance levels. And if I was to just make this clear, just so you guys see everything that's drawn in here, there's nothing on this chart. There's no indicators. These are just the levels in which I drew in for myself. And then we have the Quant Trading App script that's showing us our statistical levels. So we have a little bit of an edge that's outside of just a discretionary approach. The discretionary approach might just be in the thinking what might happen. So kind of thinking what my opponent is going to do, what move are they going to make. If I move my knight, are they going to move their bishop, using the chess analogy? That's a little bit of the discretionary with the experience, but for the most part, these levels on this chart, these are quote unquote factual. I'm not making these levels up. This is the strike price that has the highest absolute GEX for this week. This is the strike price where the positive gamma falls off. This is the strike price that has the first high negative gamma node. So we'll get into what I mean by that. We come back to here. If price was to sell off and we're looking for the nearest support, which is just basic, you take any stock market trading class, any type of course, the first thing you're going to learn is support and resistance when it comes to technical analysis. You want to have, if price breaks, where is it going to go? Where are buyers probably going to look to step up and defend that level? It's likely going to be the next high gamma node. So in this case, this is the gamma node in which I'm talking about, because this sticks out relative to all these other strike prices. This just sticks out, and I'm using a little bit of a discretion here. And why not choose this one or why not this one? It's because look at this one. This one is just, it's bigger than the others. It just makes sense. And I also want to know where's the first negative gamma strike, and that's what this neg GEX is saying here. This is negative. A node is just what these are called. These are nodes right here. So just different nodes, just like a volume profile. I'm just adopting the same terminology used in volume profile because it's a similar a way or approach to analyzing this, but instead of using the volume profile, we're using gamma exposure. So the first high negative gamma node. Now, outside of trading, I'm a cinematographer, so I kind of merge some of the terminology as I encourage you guys to do. And if you do a lot of different things in life, like I'm not just a cinematographer, I'm not just a trader, I'm also a photographer, I'm also a graphic designer, I'm also a programmer. I've done many things over the past 15 years of my life. So a lot of that is just merged into my brain as I'm, looking at things, and I'm my subconscious is pulling references from other things in which I know. So in my case, this is just terminology in which I'm familiar with. Neg, in terms of the cinematography sense, is negative fill. So if I'm trying to light a portrait, I'm trying to light an actor or something like that, and I have the light is coming in from this side, just to step away from trading. It's a little bit of a tangent here, but this is one of my extreme passions. If I were to show this here, this is the light hitting our subject, and on this side, let's just say the light is wrapping around too much and I want there to be some shadows here to make it a little bit of a moody lighting. I'll put what's called a neg right here, neg fill. So this is like a black flag, or be a duvetine fabric or something like that. So when the light bounces and it passes our subject, it gets absorbed on this side. So as it gets absorbed, it does not bounce back onto our subject because it's just energy, being absorbed on this side. So it creates these shadows. And if you look at certain movies and stuff like that, that's why certain scenes are more moodier and more dramatic than others. It's this negative fill. So I just use this terminology here, neg GEX, and I know what that means for me, but it's a way to merge also what I'm familiar with, because if I was to call out to my assistant director or something like that, or someone I'm working on set, a gaffer, those are the guys that are working with the electrical department, or they're putting up stands on set, and I say, hey, can I get some neg on the right side of his face? I want to increase the ratio of lighting and so forth. They know what I'm talking about. And the reason I'm mentioning this to you guys is because let's just say you're a carpenter in real life and you work with wood. If you're a sports person, if you're an engineer and you work with spreadsheets all day long, for the last 10 years, if you've been working with spreadsheets and you're an engineer, you have some sort of strength there, and I'm pretty sure there's an edge within yourself. So your approach might be to looking at these levels, and then you can export it in a PDF, and maybe you can import this into Excel, and you can come up with some sort of other approach. You can do the formulas yourself, and you might discover something. I'm a lot more visual, so that's why I just base everything on the graphics. I can't look at numbers for too much. My brain starts to feel like it's going crazy if I'm looking at spreadsheets or numbers for that much. So it's just using these visual cues. I'm not paying so much attention to these numbers here. All this is just excessive. This is if you are a machine, or if you have a little bit more of that's the way your brain works. So having these visual cues is what I've suggested before. If you just were to jot these on your chart, it would be helpful. Now, this is still important, I think, part of planning your week is having a little bit of a manual approach. A lot within Quant Trading App is automatic. We get the, you guys know, you get the automatic notification when the zones are hit, so you don't have to set alerts on your charts. Whenever we hit the 2 sigma levels, you guys know we get the notification. So this is on May 4th here at 12:10 a.m. If we look at the chart, May 4th, where was the SPY? This is May 4th right here, 12:10 right here. What time is this? This is 10 something. Let's turn on our studies. Let's turn off our levels, and what do we have right here? You guys get a notification, SPY hits 2 sigma. If you were just using it as simple as that and saying like, hey, didn't we think the market was probably going to be around 413? Let me maybe look to get some calls. I got the notification, we're probably going to head back up, or whatever reason, as I end up highlighting down here as an example of a type of butterfly. This was going for $3.60, and then you guys can see it ended up hitting around almost $30 or so Friday afternoon. And it's information like that. So you're talking about over $2,500 return. This is not a trade in which I took, by the way. I was just sharing this as an example. A lot of the trades in which I took, I had already shared within the option spread. And maybe if I have time at the end of this video, I will try and showcase or outline, right? But it's a lot of that is all the part of the automated process. So this is intentional. Yes, a tool can be built to put this directly on your chart, but then you're going to miss out in part of the game planning for yourself for the weekend. I actually look forward to Sunday nights or sometimes Monday morning doing this process, because this is the last part of the TA, which is technical analysis. It's the last part of myself where I'm manually doing. I'm not really drawing. It's fun almost now to draw levels on my chart because I don't do this part anymore. All of that has been automated because of Quant Trading App. So that means this part it allows me to really focus in and sit back after I draw these levels on my chart. Then I can just look at it before price does all of this, which is what we have here. I can sit back and say, when I'm adding my notes, and just say, what do I think is going to happen this week? All right. And where do I think the market's going to go? And if it doesn't go there, what will I do? What type of spreads can I come up with? I can have rough ideas beforehand. And that means I'm more prepared than the next guy that's over here just trading chaotically because, oh my God, the market's going down. Oh my God, I got to get called. Oh my God. And they're just, all over the place. I can just sit back and be a little bit more calm. I can go pour myself some water. I can come back. I can have a snack. I'm just sitting back and I'm just saying, okay, let me just observe and see what's happening. And then when I see some sort of confluence, or the edge is that there's just so much great risk reward that I almost feel inclined to have to take the trade. I'm looking for other little clues as it's happening, but it's a lot more calm, tranquil state. It's not as, I don't feel as volatile while the market's being volatile, because there's in a sense a framework. This is just one of the frameworks we have. Again, the Quant Trading App weekly levels as well as the intraday levels also provides a framework for comfortability for what I'm expecting price to do, or where I'm expecting it to stay within certain ranges. So as we continue right along now, we have, that's where this high negative gamma strike is, right? Another thing, a little tip here just to pay attention to, we can see let's pay attention to this. Like, look at how there's barely any gamma exposure here. And I've probably showcased, more than a handful of times in a few videos at this point. There's barely any net negative gamma exposure, right? And how does price trade through that level? If we come back to the chart, look at how price moved. Just clean, just flew right past it. Now, is that a coincidence? We can say yes. Of course, it's coincidence. But if we keep seeing it more and more times, and I've been saying it for at least a year now, if we see this happening here, same thing like a volume profile. If there's low volume nodes, price is likely to move through it quicker. If you see a lot of high volume nodes, price is probably going to be choppy in that area. That's why on this chart, I also put down here, price will be sticky in this range, right? So we'll get to it. But between here, I'm not expecting choppy price action. The floor breaks. What happens if you're standing on the second floor and then the floor breaks? You're just going to fall down to the first floor, most likely, right? There's nothing really in between. You might bounce on the couch in between, hopefully, or you might bounce on a table or something like that, hopefully, so you don't injure yourself, hypothetically speaking. But if there's no real structure in between, where are you likely to go? To the next place of high structure. And that's what we know is in this area. So I just drew a range between 409 and a little bit below 408. I just gave it a little bit of a range here to expect, and I just randomly did that just because of this right here. I like that these two just kind of match. I was like, okay, I got a nice little pocket of right here 407.50 for where prices, might be a little bit sticky in this area, but I know this is the real strike price to be aware of, giving it a little bit of a range. Guys, this is also for the entire week, all of the expirations for the week. This is not a singular expiration. So this is an aggregation for the entire upcoming week, and that's already providing, for me at least, a lot more of an edge, because I don't like to put so much weight on just one particular expiration. Obviously, if I'm structuring a spread, I'll isolate and say like, oh, let me see what Friday's looking like, because we can see like Friday has almost 40% of all the gamma for this profile is in Friday. So obviously Friday is significant, but we know that already. That's the weekly expiration. The weekly is always going to have a lot of importance, and then the shortest expiration is always going to have the second highest, usually speaking, because that's the way gamma works. Gamma is most sensitive the closer and closer it is to expiration. So that's why it's so high for, at this point, it would have been Monday's expiration and then the Friday. So then I'll go in and just see like, what does Monday exactly look like in comparison to Friday? If I have time to do that, I'll isolate those two and run, the reports on Quant Trading App, which makes it very simple to do. All we have to do is just uncheck these, and then we can submit it. And then maybe we can just combine Monday and Tuesday. You can get a little bit, expressive with yourself and do exactly what you'd like. All I know is I like to start with just how does the whole week go. If I have more time, or if I care to, then I'll go into the 0 DTE pre-market or so, or as the market opens. And you don't need to use the advanced GEX tab. As you guys know, you guys can just come to the you can just press gamma exposure, and that will just by default show you the most shortest DTE. So if it's a 0 DTE, if the market's open, you just click this, it'll show you the 0 DTE. The advanced GEX is if you're trying to build custom profiles. So as we jump back to this page here, we have our strike price here. Now, where's the next highest negative GEX strike? We have this one right here. But more importantly, this one is already larger than this one. So this is probably going to have an even more significant gravitational pull. Price is attracted to high liquidity areas, and high liquidity areas are generally going to be where there's a lot of gamma exposure. That's just the dynamics of how a lot of this works. Thank you to the market makers. They make it actually easier for us to trade. They are probably, at least my biggest ally in the market. I do not see them as enemies. It's because of them and their algorithms and their programming why trading has become so much easier for myself versus when I was a complete newbie trader. You fall into this rhetoric of like everyone's cursing out the market makers for stopping them out. And now if I do get stopped out occasionally by market maker, I laugh it off because I just say, congratulations, you got me, and I clap and I applaud them. But for the most part, now I'm seeing them as they're an ally. I'm hoping their algorithms work the way they work, because that's what makes all of this possible. That's how I'm able days in advance to say what I think is likely going to happen, and then have the market close to a point here. And this is, if we're in week 18 or so out of the year so far, 18 weeks so far from the year, I'd probably say about 8 out of these 18 weeks, the market is closed like right around a range in which I would have thought we probably would have been closed. The past, you guys can go back and watch a lot of the previous videos. Not all of them are public on YouTube, but I have released some videos showing a little bit of a breakdown for the Quant Trading App members with the QTA levels. QTA is Quant Trading App, a breakdown to how price traded around some of those levels, and there's a lot of gems packed into each of those videos. This one, again, is just isolated on the gamma exposure. So moving right along now, the logic being, if this first high negative gamma node does not hold, where's the next highest structural level? It's N1. N1, as I mentioned at the beginning of this segment here, is the highest negative gamma strike. Remember, WTD just means week to date. So I'm just saying so I know for myself, this is, all these levels here are WTD, but I put that on the chart for you guys as I'm trying to communicate it. When I do this for myself, I actually didn't always even draw the levels on my chart. I would just, I would look at this on a Sunday night or Monday morning, and I would have a rough idea already in my mind. I'm very familiar with the SPY SPX, which means I can close my eyes at night before I fall asleep and already visualize the chart. I look at this because it's the main component of my trading is the SPX, and I do most of my analysis on the SPY, and then I'll check the ES for technical levels or the volume profile. So for the most part, this isn't something I'm communicating, I'm color coordinating and stuff like that for you guys, but this isn't really my own, it takes me a lot faster than it would take to actually articulate it to the next person. All right, so if we jump back to 405 here, I wanted to point out the significance again. When I'm doing this, I'm not looking at these numbers. I'm looking more so at this right here. I like the visual cue, but for those of you that like the numbers, this is just a little bit more, again, of a common sense approach. Look at how low the net GEX is here relative to, look at this region here. These numbers are pretty much all in the six figures, right? So we'll just say this is 100,000, 200,000, 100,000, almost 200,000. Relative to this, this is barely non-existent. This is below 75. This pops up a little bit, so it's over 100,000 here. This is, and 100,000 is just an arbitrary number I'm calling out right now. I don't know if that's high or low. That actually is probably something I might want to track. I do know with the net notional delta, if it's over about 3 to 5 billion, that's a lot. But besides the point, the numbers aren't that relevant. It's all about relation to each other. We can say, if you didn't know anything prior to watching this video, and I said, these numbers are relatively lower than these numbers, you can agree. If we add up all these numbers right here, or we take 5 of these and we add up 6 of these and we add up 5 of these and 5 of these, we know that these numbers are larger. That's because this is the spot price, and the strike prices around the spot price are going to have higher gamma exposure. However, when you see a strike price that is far away, that also has a decent amount of gamma exposure, that's pretty significant, because it means if price was to go closer to that strike price, the gamma exposure is going to grow. And this strike price right here of 408 is about a 2% drop on the SPX, and yet it had a decent amount of gamma exposure to poke out. That's pretty significant here. That's almost saying, if we looked at, and this is the absolute gamma, if we look at this one right here, this is 418, the absolute gamma is 77. This one is, we'll say, 60, but this one is 0.5% away. This one is 2% away, so it's almost 4 times further away, and the absolute GEX is higher. Now, a simpler way, I'm showing this for you numbers, guys, but I'm not looking at this, guys. Like, that just already sounds confusing even as I'm showing it to you guys. That's why we have this. I come down here, and the purple in the background makes it very easy for me to be like, okay, so where is the high gamma nodes? So this one right here is the highest purple level, so this is just our absolute GEX, and we know that's 415. That's what this is telling us. It's telling us the same information as 415. So when it comes down to the absolute GEX, I like to just look at this with the absolute GEX turned on. When I share the screenshot, so it has all the information, but then I will just turn off the net GEX, and I will just look at it in isolation. So just to show you guys an example, if I was to come down here, I might turn off the net GEX, and then just put on the absolute GEX and look at it this way. And then I can hover over this and say, like, okay, cool. So we have 410, we have a 412, and then we have, it tapers off of 413 here. So I have 3 levels that are significant from the absolute GEX perspective, and let's see how they correlate with this, and try to see if I see something of significance. Because if I were to turn off the net GEX, let's just say the absolute GEX this is 405 right here. Let's just say this was all the way up here. That would be very significant. I'd be like, wow, because that strike price is so far away, relatively speaking. Why is the absolute GEX so high? It's very easy to catch it here. But when this looks more normal, this is a nice little tight range here from an absolute GEX perspective. So that's where I'm just looking at this, and that's where I just mark on the chart A1. So A1 is the highest absolute GEX. That's what we see right here. Then we have 420 is A2. So you see this purple in the background, it spikes. It's pretty close to here. So that's why on my chart I have A2 right here. So this is the second highest absolute GEX. And then we have this one right here. This is 413. That's A3. So what do I have on my chart? I have A3. So I just know where's absolute GEX number 1, 2, and 3. But again, these will change because as price sells off, and it breaks these levels and it gets closer to this, and as time passes by, remember, as Monday's expiration is done, then Tuesday's expiration is done, that profile is going to, in a sense, change. So, but I'll use the 0 DTE within the options data that's streamlined within QTA. So we'll get this here as this is changing throughout the week. But I like to just know at the start of the week, what was the actual structure? Because all the stuff that's going to happen within the week usually is just going to be noise. And you guys will notice from time to time again, the market it'll do the craziest, and then the net change by the end of the week is not that crazy. So by net change, I mean the market went from here to here. This was essentially the range this week. That was a 3.33% range. So it moved about 14 points. But then when we think about it, from where did we open this week? We opened right here. And then where did we close? Right here. That's about 0.68%, so less than 3 points. So even though the market was doing this craziness, 14 points, it moved less than 3 points for the week. Very tight net change. And if the net change would technically be, if you're looking at weekly candles, it would be last week's close. So from here to here, it moved also small. It's less than 3 points. So from here to here, we're talking, less than 4 points, less than 1%. That's what the market actually did. Yes, it did. It did a whole lot throughout the week. But when it was all said and done, it barely moved. And that's something I'm constantly reminding myself of. No matter how volatile and crazy things get, you guys will notice if you just calm down and take a look, it doesn't really go that much. And I've showcased that in other videos within here. If you guys can come to the candle stats and run your own reports, you guys should know about this at that point within QTA. You guys can see that for yourself. If you know these types of things, if you know this information, it eases so much of the concern. So from game plan perspective, if the floor breaks, where do I think we're going is down here. However, what do we know about the market? Break and retest. We know when levels break, when key levels break, the market likes to retest them. So that's why within the Discord, I ended up saying later in the week, what did I say? I said, okay, yeah, the VIX is coming, blah, blah, blah. I said, if it's very possible the SPY makes it back up to 413. I had mentioned that a couple times within the gold chats, my notes, probably in the option spreads, just trying to kind of flash it to you guys in multiple different places. I was letting you guys know, however, the VIX did break. So the VIX was confirming that this sell-off was actually, it was backed by an increase in implied volatility, which is something that's, it legitimizes the sell-off, versus this right here is actually one that you want to be cautious getting in front of, because it's showing that we're probably going to head lower. So what I then went and kind of showcased to you guys later, when the SPY came back to this level, that's where we looked for the divergence. Now, price got sticky right within this range, as to be expected. We went over why, this is the high negative gamma mode. It needs to cool out for a bit, in a sense. Like, the market's not going to go from 415 and straight down to zero. It has to pick some spot between 415 and 0. As long as it's programmed the way it's programmed, it will find a spot in which it will have to cool off for a bit and consolidate. They have the limit down in place, so it won't actually just go straight down to 0. They will shut the servers off to prevent that from happening, to prevent flash crashes and stuff like that. However, for the most part, we know it needs to pause somewhere. So we already identify where it's likely to pause. And what happens? Guys, look at that. It ends up pausing in here. These are 15-minute candles. So we have 1, 2, 3, 4. So we have an hour and 15 minutes, an hour and a half or so. It consolidates in here. Now, if you're looking at Tuesday and this is 415, the market breaks 415, we already established this is a nice little line in the sand for the most part. Market gaps down. It shows right there. That's aggressive. It didn't open and sell off. It gapped down below the level. That's almost like a big FU, like, a middle finger from the bears to the bulls, saying we are going to crush you guys right now. And these levels, these absolute gamma strikes, they will act as a repellent, we'll say, as like a magnet. So if we have a magnet that's going to attract, it's also going to repel. So it gapping down below here, if implied volatility spikes and it's increasing, which we saw happening with the VIX, this level might actually act as a level that's going to push price further down. The same way, if there was a lot of implied volatility, and let's just say the market was down here, and then the market went all the way up, and then it broke 415, and implied volatility dropped, this level now is going to act as a level that's going to help push price up to this 420 level. But we're dealing with the opposite in this case. Price gapped down below 415. Don't really need to understand the exact mechanics behind it. Again, it'll take too long to explain all of this, and I've tried in previous videos. Now I'm, again, going to say this for the last time, just trying to simplify these things more and more for you guys. absolute gamma, we gapped down below it. We can think that price is going to be pushed off of it. It could have come here and then come back to this level. That's actually what I was expecting at that point. I was expecting a bounce at 413, but that didn't happen. It just sliced right through it. That's that big statement of bears showing, hey, we gapped down below this level. The first 30 minutes of the day, usually you will see some sort of reversal right at the top of 30 minutes. So at 10 a.m. Eastern time is very infamous for the 10 a.m. reversals, 10:15 and 10:30 reversals, and as well as the 9:15. So all Eastern time. The market opens at 9:30 Eastern time. I base everything off of Eastern time. It doesn't matter which time zone in which I'm in. That's the time. That's the market's time. The market, it is located in New York. Therefore, 9:30 Eastern time. It doesn't matter if I'm in Italy, Paris, Los Angeles, it doesn't matter. My brain is still referencing that logic here. So to make it simple, regardless of the time zone, I'm just using the 15-minute candles. A couple 15-minute candles, I would expect the market to, in a sense, retest this level, but it didn't. It just went boom. And that right there is just letting us know. This crack right here is letting us know, hey, you do not want to be bullish on a day like this. Don't look for any type of bullish setups. We are selling off. The floor does not hold. We just break right through the floor. That now is momentum. Momentum is going to drive prices further than anyone can expect. I did not expect us to hit 408 within Tuesday. It was Monday. As some of you guys know, I held that one SPY butterfly that was an at the money fly from Friday. It was really nice profits on the Monday. I decided to hold one. And then I closed it out around here and I gave back all the profits on that one. Now, granted, where I started from, I was already up a lot, but it was just like a joke. I was hoping to squeeze a little bit more of theta decay out of the next one, but it didn't work out because the market just went, just straight down. We get onto this level now. Price is choppy. So what are you looking for? You were looking for, is it struggling to go lower? What signs do we see? We start seeing multiple shadows forming, or tails, however you like to call it, forming on these candlesticks. It's not able to close lower. We see the first green candle. We see where does the volume start tapering. We can see the volume spikes as it gets here. So this is a little bit of the capitulation happening, insane amount of volume happening in this area, and then the volume just kind of tapers out. Then we also get a decrease. If we were to come here and look at it, we get a decrease in implied volatility. So if I were to pull this open here, we get, this is on the Tuesday, implied volatility spikes. And then what happens? Implied volatility comes down and it doesn't go higher. It struggles. This is a drop in implied volatility, right? Or a proxy for a way to interpret that. There's not enough information right now on the one, this right here. So this isn't something that I think it's too new, so there's not enough data on it. It's cool. I'm learning with you guys. We're all trying to establish an edge with the VIX one day. The 9 day has been pretty cool, but it's pretty close to the standard VIX. We can see there's a little bit of divergence right here. But for the most part, my main measure is still going to be the VIX, just because it's been around much longer. There's enough information on it, and the other two were just launched last month. So we have a slight divergence here. So that right there is in a sense, it should have some sort of a comfort level in saying, okay, cool. I have a reason to think now we're probably not going to go any lower because implied volatility is decreasing. So look for IV divergence as a sign to go long or confirmation. Remember, this is typed up Sunday night. This is what I was thinking was likely to happen from Sunday night. If we get down here, I don't know it's going to happen, so that's why I'm just saying look for the IV divergence. We got the IV divergence. And where do we go long to? We retrace back to 413. Now, Wednesday is the FOMC announcement. So price action is always going to be a little bit chaotic, a little bit crazy. So implied volatility was able to sustain itself. But I came in here later. I don't remember, what was I saying here? So 410, weekly max pain, blah, blah, blah. VIX saying it's validating the move, XYZ. And then this was now the next day. I came in and showed this to you guys. So I think this is pretty important because what do we have now? So now after the FOMC, what happens? The SPY sells off and it comes back to 408. Now, you guys know this in plenty of the videos in which I've done. This is something I say, if you have a child, if you have a 4 or 5 year old, 6-year-old child, and you tell them, hey, can you draw a circle around these two points and connect them? So we have A, as I like to say, and B, and draw a line connecting these two. And it's perfectly lateral. Then we come here And at the same time, because this is Tuesday, and this would be Tuesday, and then we have, this is the close on Wednesday, this is the close on Wednesday, draw a line. Now, this line, if it was to match up exactly with this line should be perfectly this way, right? And it should have a circle here. However, it's not. It's down here. What does this down represent? This down represents a drop in the VIX, which we can use as a proxy for a drop in implied volatility. That drop is telling me as the trader now, hey, the VIX is calculated based on approximately 30 DTE SPX options, and the put options heavily affect the formula. If really, really big institutions are not expecting higher implied volatility over the next 30 days, right now, again, this can change as we know the next day that the VIX ended up going higher, but right now with this information, no one's really concerned long term, and long term is relative. Long term saying over the next few weeks, no one's really expecting a larger move. Why should I expect more selling, or why should I expect this week to continue selling off and close at the lows? I'm not, because that's what this data is telling me. And that's what I was looking for at the start of the week. Before this happened, I was expecting something like that to happen. So, however, if 408 does not hold, where am I expecting us to go? To 405. So I came in and I said, I went long, and I'm going long, and then I'm also pointing this out. There's a decent amount of negative gamma. You guys should also know at this point when there's a ton of negative gamma. This is straight from the market overview page. If you guys scroll down here, there's a little bit of notes to let you guys know what it's inferring and what this is in a sense saying. So the market's closed, so none of this is live right now, but you guys know once the market is open, you guys can just turn the auto refresh every 15 minutes. So it'll give you guys new information, and you guys can see this. If you see a ton of red right here and implied volatility is really high, that means once towards the end of the week, this is the end of the week. So we have the end of the week, and then we have the upcoming week information also at the bottom here. So it's giving you a little bit of a forecast for next week already. If you're trying to look for extra confirmation, it's also showing you the 0 DTE. There is no 0 DTE because the market is closed. That's why this page is here. If you have any trouble finding it, it's right on the dashboard. Just go to market overview, and it's going to show you the SPY, the QQQ, and then we also have the SPX also on this page all in one. It's literally saying to you this information here. So we have, let's open this up in the browser so we can zoom in. We have the end of the week net negative end of the week net GEX is negative for the SPY and SPX. So expect increased volatility and strike N1 to potentially get touched this week. Look for confluence with max pain, absolute GEX, and IV. So it's telling us expect increased volatility and strike N1 to get touched this week. That was earlier in the week. What do we get? We get N1 gets touched this week. So let's just jump back to, this is N1. So it's letting us know earlier in the week, whenever that screenshot was, or even here, I don't remember when, this is just, I'm just resharing. This would have been from the 3rd here, so the 3rd after the market closed. So the 3rd would be this day right here. So it's letting us know, which is for some of you guys that were going long, I was saying, be prepared. If you're going long, you have to base your risk off of expecting us to go 405. For QTA, I said 2 sigma. Why? We know where 2 sigma was. This is just beautiful right here. So we have extra insurance below the negative gamma strike of 2 sigma. So I'm not going to explain 2 sigma. Quant Trading App members, you guys already know what 2 sigma is. If you don't know, you can find out within Quant Trading App if you become a gold member, or if you watch any of the introductory videos within the Quant Trading App website. But this is letting us know this is where I have to base my risk off of. So if I'm looking to be long here, I have to expect price at this point to come this far down. What's going to be my drawdown? If the drawdown is going to be $500, that's not a lot for me. I might say I'm willing to have about a $1,000 drawdown. So maybe I'll just increase my size a little bit. I want to leave a little bit of wiggle room to add if we get down to here, because the data is showing we're likely to get to at least 405, and that's where we end up getting. By the way, these 2 sigma levels, these are also drawn in from Sunday. So this is all in advance. It's days in advance. This is now Thursday we hit. However, we have 4 days in advance to have an idea of where the market might bounce for this week. We have confluence right there on our chart. Coincidentally, it's also there. If we were to zoom out, we can see this right here. This is the ES we have a couple levels right here. The ES didn't make it all the way down to 2 sigma, and then we have the SPX. The SPX held up right here. It didn't make it down to 2 sigma. The SPY did. If we take a look at the QQQ, we had a little bit of a bullish divergence in the QQQ. QQQ was in the QTA weekly buy zone, so it didn't even make it down to 2 sigma, so that's showing relative strength within the tech sector, and it's all right there on our chart. Where did the SPY close? The SPY didn't even make it back up to here, which is the highest positive GEX. That's what this green level is on our chart. It's just another Quant Trading App script. Where did the NASDAQ go? It went all the way up to P1. So again, this is showing us what's strong. Tech. Why was tech strong? We know Apple had earnings this week. Last week was some big tech earnings also. So the market has been, the tech stocks have been performing pretty well post earnings. So it makes sense. That's what we're seeing on the chart. But from a relative standpoint, this tech is stronger. NASDAQ should have been all the way down here on Thursday, but it was not. So that means if it's on Friday, let's just say you're looking to be long on Friday, but you don't know what you want to buy, maybe look at some of your strongest tech stocks of the week, or maybe just trade the NASDAQ. Just get long the QQQ based on this information, or look for a long setup if you're not, if you don't have your other confluences and other reasons to be long. So if we come out here, so multiple, reasons, multiple edge. There was the intraday zone, I believe, which we also had. We had at least 1 million confluences. I think, let me see, let me see if what I highlighted here within the chat. Shopify was a nice breakout on Shop, but if we come here, we can see this is what it looked like. So you see this little gray level here. That's the intraday zone. So it's giving us extra confirmation right here. Quant Trading App intraday levels. We have the weekly levels, intraday levels. Multiple signs down here to look to be long. And then what are the reasons were mentioned within the chat. So coming around to the conclusion of this video now, the markets, for me, I did not expect this to go to 413 when we were down here though, to be honest. I expected 410. So some of you guys know I traded some butterflies targeting 410. I had to come in and adjust the next day because we ended up breaking and actually going. It's still crazy to see how this is playing out, but you guys can see here's a nice technical pattern, VWAP's holding, and then we break. So this is my trigger. I think one of you guys in chat asked what I was doing once we broke. Now you guys are asking the right questions, and it was good to see that, I think. And I was just like, I was already out of the trade. Plan to adjust the iron butterfly for Monday with the break of the intraday zone. Are you just using it as insurance to the downside? So that's the right question to ask. Now we're consolidating here. I'm not concerned. The moment we broke from here, I was like, okay, now I'm in trouble for the type of spreads in which I'm running. But coming around to the end of this video, so I don't want to talk about each of the individual spreads. It's going to take too long that I traded, but you guys are getting a rough idea. Whereas as we're within this range here, you can plan. This is where we're going to be. If we break here, there's a momentum move. Here's a scalp up to 413. You already have some sort of a rough idea and a framework. Guys, I hope you enjoyed this video. Actually, it felt good to actually put this one out. I've been back in LA and New York, and now I'm actually in New York. I'm in my main office, so it feels good to be able to record a proper video for you guys, and I'm not on a laptop. And then for the most part, I think I've covered everything I wanted to go over. I'm considering this more so as a webinar. I was going to do a webinar, but it probably would have been 2 hours to go over everything and then try to answer the questions. So what is this? Oh yeah, this is the butterfly. It's the weekend now, so option strat is it's not showing. I don't know what this profile looks like, but this is the butterfly that we still have running. It's up 85%. So targeting 413, and this was open. This is just one of the positions which was opened earlier in the week. Let me just see if I can find it here. I think I opened it on Wednesday, showing you guys an example. So just using the information because there's so many different ways to trade. I happen to be completely infatuated with butterflies. So right here, so I went with Tumas. We were talking, you said you went with something like this, a little further DTE. I went with something that I knew was more likely to get hit, so a little bit closer to the money. I went with the SPY because I didn't want too much capital in the trade, and I was able to scale in and scale out and add more on the Thursday when we gapped down. But this was right here on the 3rd, so right before the market closed. So this is about 17 minutes before the market closed here. Just what I grabbed, $1.56, getting 8 of these or so. It's not that expensive. 6 of these, and then you can add 4 the next day. Then you have a solid 10 of these is about the equivalent of buying 1 on the SPX, and that's about $1,500 in capital. and now it's up 85%. So I've already scaled out most of this, but you see targeting, this is just saying I'm targeting 413 for Monday. I didn't want to go with the Friday expiration just because I wanted to give it a little bit more time. In hindsight, the Friday expiration would have been amazing, and I believe later in Friday I pointed out something like that, like the trade would have been up on the SPX would have been up so much more. But I often opt on the side of caution when there's a lot of volatility, just to be safe. I don't like drawdowns, so right here should have went with today's expiration, or at least Monday would have been up 900. So this right here, so this would have been the equivalent. This is the one in which I was in, $1.65. I'm still in this one for the SPX, targeting again around that general area. That's about 413 or so on the SPY, give or take a dollar or two, a point or two. And this one I was only up 42%, which is $165 per unit. And with one on the SPX for the Friday expiration would have been up $900. But these are all opened a couple days in advance. They were open up right here and right here and so forth. But that's how I swing trade, guys, and that's how this doesn't scare me out on a day like this. Now, I did have to realize the loss on one of my trades just because the risk was a little too high, and it was a broken wing butterfly that would have obviously made a ton of money, or made a decent amount of money by Friday, but the risk was too high. I was risking about $6,000 or so if the SPX still continued to go, and I didn't really want to take that kind of risk because there's always the chance for if I'm wrong. Because if this level did break, it would have meant a bloodbath for the markets. Statistically, wouldn't have been probable, but those bloodbaths are the ones where you can have massive drawdowns, and I don't like huge drawdowns on my accounts. If you enjoyed the video, like it, leave a comment down below. If you're interested in QTA, Quant Trading App, link is in the description, and look forward to hearing from you guys. Take care. See you in the next one.